Welcome to the Gold Newsletter Podcast, your bank of knowledge of investments, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives to increase your wealth monetarily and educationally.
This is Fergus Hodgson with the Gold Newsletter Podcast. Thanks so much for listening. I really appreciate it, and I hope we deliver today a great show. I have an interesting topic and guest. We have Chris Rawley, whom I met at the New Orleans Investment Conference last year. He is the founder and CEO of Harvest Returns, and he based in Fort Worth, Texas. He was a captain, or is a captain. I'm not sure how these things work with the military, whether you hold your titles of the United States Navy Reserve. And 25 years. He was deployed in Afghanistan, Iraq, throughout Africa, the Middle East, the Western Pacific, and he has degrees from Texas A&M and an MBA from George Washington University. Harvest Returns, it says here you wanted to bring this vision to reality, the idea of building a crowdfunding platform to streamline agriculture investment. I guess first I should say just thank you for giving us your time, Chris. So welcome to the show.
Thank you, Fergus. It's great to be on.
This idea, I mean, it's an idea that whose time has come, of course, this crowdfunding approach to investment, because conventional secondary markets seem to be becoming outdated quickly. What do you mean by a crowdfunding platform then, for people who are not familiar with that term?
Sure. So crowdfunding is a concept that actually started in the UK, I think a little over a decade ago, and it's kind of made its way around the world. It came into the United States in around 2012 when there was some laws passed, something called the Jobs Act, and that enabled basically people to syndicate investments using smaller amounts of money and more flexible rules for those syndications. So, of course, people have always brought larger syndicates together to pool money to buy larger real estate projects and things such as that. But these new crowdfunding rules that have continued to evolve are making it much more mainstream, enabling using technology, people's phones and tablets and desktops, of course, to be able to make investments completely online. So as far as a way to invest, crowdfunding is becoming more and more popular. And there is, if you can name the asset, there is probably a equity crowdfunding site to invest in. I've seen fine art, I've seen racehorses, I've seen lawsuit outcomes and insurance claim outcomes, and every type of real estate, and of course our platform that enables you to invest in agriculture.
No, it's an exciting development to me. And on the last episode, I was discussing with our editor, Brian Lundeen, the way that the financial industry is just in such an era of disruption or change. It's a fascinating time to be a part of it. And crowdfunding is one element where basically people are building their own stock markets, right? They're just saying, we don't need to go through this particular channel. We're going to start up a new one and open it up. The one predicament which more maybe seasoned investors or seasoned professionals might raise is that there is this challenge of information embedded in the market price. And when you have smaller platforms or more dispersed platforms, how do you assure that there's as much analysis or information embedded in the buyers and sellers? Do you follow the logic there?
Yeah, I believe so. So obviously something like the New York Stock Exchange, the publicly traded stock market, they kind of pride themselves on transparency of information, which I think is a little ironic, because if you've ever been behind the sausage making on how earnings are done at a Fortune 500 company, you'd see that that's really not true at all. But they do have public reporting requirements and things like that. So enter private equity and private placements such as those found on crowdfunding platform. I think you see a higher level of transparency, quite honestly, with those types of investments, because you're generally investing directly in a company where mostly startups and smaller companies or individual real estate projects, occasionally funds, where there's quite a bit of information, and the average real estate crowdfunding, you can ask questions and they'll be directly answered by the CEO of these small startups. And so I see a higher level of transparency compared to many other types of investment, if that makes sense.
I assume that there are. I'm not so familiar with them, but what about these crowdfunding platforms? Are there also mechanisms to short these markets? So there are people borrowing stocks?
Not that I've seen. Like I said, there's just myriad of crowdfunding platforms out there. But generally, when you invest in a crowdfunded investment, it's a private placement investment, and you are investing in either an equity share interest in that company, or sometimes there's peer-to-peer lending and crowdfunding of debt instruments as well. So there's number of different types of structures and a number of different types of risk return profiles across crowdfunding platforms that I've seen.
Yeah, I just bring that up because I'm becoming more and more aware of the fact that when you buy stocks and these your publicly traded stocks, you buy from the broker, and then the broker will basically lend or use that stock in other ways. So there's almost like a fractional ownership scenario. It's I'm still trying to wrap my head around it, to be frank, and I've discussed this with various finance professors. But regardless, I just see some room for not full ownership of what you think you own, or a more risky. I don't have 100% confidence in that process. And in these crowdfunding platforms, it seems to me, usually it's more just direct. You straight own that stock, and no one else is owning it at the same time.
Yeah, of course. This is why private equity is so popular with say high net worth family offices and institutional investors, because that minimizes that counterparty risk. So in the stock market, obviously, as you mentioned, there's market manipulators, there's market makers, there's a derivatives market which can greatly enhance the risk of any given instrument or any given equity based on how those people are either shorting or playing with options on that particular equity. So I think with the crowdfunding is just like private equity, but on a smaller scale with lower barriers to entry.
And one other aspect that this crowdfunding brings in, and this is where your organization has a role to play, is the way that not only is it a different platform or maybe mechanism for investing, you're bringing in different types of companies or different types of investments into the play. So in this alternative investing world, in your case, your organization is Harvest Returns. You're focusing on agriculture, which maybe isn't as easy to invest in normally. Do you want to comment on how crowdfunding makes agricultural investment simpler?
Sure. So, obviously, agriculture is a ubiquitous market. It's one of the oldest markets, if not the oldest market out there. It's an industry that supplies food, clothing, housing, fuel, fiber to basically everyone in the world. But it's an underrated as an investment asset class, and that's because it's challenging to access these deals. So even institutional agriculture investment, when you look at sort of the history of it, it didn't really begin until the 1980s in any sort of big manner. Prior to that, everything was family farms. And you still look, family farms are still in the U.S. and across the world are still the primary mechanism by which people own farmland. Even large farms, which one might think of as a commercial industrial farm, well, it's owned by a family. So I think over 90% of farms in the U.S. are still owned by families. That said, if you want to invest in one of these farms on a small or large scale, that can be a challenging thing to do from a barrier to entry regarding the amount of capital that's required to go out and buy a farm of enough scale to produce some sort of viable returns based on the knowledge that you have to have or the knowledge of the farm manager that you're going to offer, and many other factors. It's just not easy to go out and buy a farm. So when you enter crowdfunding, what our platform at Harvest Returns does is enable you to come in and take advantage of this wonderful asset at a much smaller barrier to entry based on minimum investment, the knowledge you have, the due diligence that's required to get access to one of these income-producing agricultural investments.
For more than 40 years, top financial experts and private investors from all over the world have gathered for the New Orleans Investment Conference to discover new opportunities and strategies, exchange ideas, and plan for the coming year. To learn more about today's investing environment and updates, join Mark Skousen, Peter Schiff, Brian London, Robert Kiyosaki, Doug Casey, and dozens of other experts at this year's event from the 1st to the 4th of November. Go to NewOrleansConference.com to register today.
And people, long-time listeners to the show may know that I'm from a sheep and cattle farm in New Zealand. My brother is still managing our family farm. So it's maybe more of an acute or personal story to me. And the fact is that you're right, that often these families own these large amounts of land, but don't necessarily have the liquidity to make the best use of that. So I do see a role for crowdfunding to make those farms superior. I just know, I was speaking with my brother recently about this, the way that often there is a great deal of potential within land, but you'll be asset rich and cash poor. That's the saying that these farmers always have, and don't have the capacity to really utilize it as you would like to.
No, that's spot on.
Okay, so one of the articles promoting this from your site is one that caught my attention, is why millennials should invest in agriculture. And then this is broken down to what is agriculture and why should I care about it, and connect to your food. This is a question that I've been having recently too, about how much, not necessarily emotion, but personal relationship you should have with your investments. Here you're actually actively promoting it and saying, go out and connect with your food and get involved with sustainable agriculture. Is this counterproductive to finding returns?
That's a great question. I consider myself a fairly unemotional investor, but I also don't think that necessarily applies to everyone. And I think there's this growing, especially among younger generation of investors, there's a growing need to connect with what they're investing in, feel good about what they're investing in, have that investment needs to be socially and environmentally and, of course, economically viable. And there's sustainable investing, impact investing, conscientious capitalism, whatever you want to call it. There is a trend out there, and that's viable. But I do think you point out a great sort of conundrum with that particular philosophy.
This came to my attention because recently I was reading an article it's called Business School Lausanne, and this is a business school that actually focuses a lot on maybe innovative finance and finance that they call, quote, sustainable. I find that term a little bit hard to define, but they were just saying that now 1/4 of total investments made by professionals are following ESG, they call it environmental, social, and governance criteria. So they're somewhat ethical. And they just say that the basic assertion is that sustainable or ethical finance is no longer niche. It's really mainstream if 1/4 of investments are in that domain. However, they make the point that all these different institutions are doing it except hedge funds. So the ones who are just so focused on returns, they're not about it. So that's why that tension maybe came to mind. So when you say connect with food, did you write this piece? Do you know the article I'm referring to?
I did with the help of some of the millennials on our team. I'm actually a middle of the road Gen Xer, but we've got some great young, energetic millennials on the team.
So you say connect to your food, grow your wealth, and there's no more risk than the stock market. Do you want to back up that statement?
Sure. Well, from a return standpoint, agriculture actually has beat over the long-term stock market. It's generally when you're in not always, but generally when you're in investment agriculture, you've got something tangible backing up that investment. Mostly, it's a land component. So it's just like real estate. Your apartment building burns down, you're still sitting on a valuable piece of land. Same thing with farmland, although it tends to be different, that if you lose a crop to disease or whatever, or you lose your livestock, you've got that underlying land there. But that's just one component of it. As I mentioned earlier, the deals can be structured just about any way you can imagine. That there are debt structured deal where you're securitizing livestock. You can have just a long-term appreciation on the land. There's, of course, timber, where you've got the growth of the trees over the long term and the underlying land there. And every kind of agriculture is very unique, and it's a really wide universe of investments, from sort of what most Americans, what most people think of as agriculture as row crops, just very large fields of soy or corn or wheat or cotton versus tree crops, which are a pretty popular thing, pistachios and almonds these days, producing a much higher return. And then today, there's a new trends in what are called novel production methods. And this is indoor farming, vertical farming, urban farming, hydroponics, aquaponics, and aquaculture. So the production farming is getting much more fragmented, I think, all over the world, and that presents opportunities for investors. And for the most part, I feel these are pretty safe opportunities.
One attribute of agricultural investing is what you mentioned before, that it's just, it's maybe the oldest industry that we can think of. And that means it doesn't have the buzzword excitement, perhaps, that other investments do have. And so, why do you think then, is that one explanation for why it's maybe less fashionable or trendy and doesn't get the attention it merits?
Yeah, of course. There is a growing sector of what's called ag tech, and we consider ourselves kind of our own company at the nexus of ag tech and financial tech. But for production agriculture itself, it's not a sexy investment, but people who want to build their wealth over the long term, it makes a lot of sense to own, like any other investment that owns income producing assets that appreciate over time. It's a great investment, and that's one of the reasons we think it's a great investment for millennials to look at, because when you're that young, starting out your career, something like timber or farm that is going to take a while to produce a return, but are going to produce an outsized return, there's that illiquidity premium where we're going to lock up your money for some amount of time, but you are going to be rewarded for it, and you've got that time at that place in your life to reap those rewards.
Right. And I've got, the website is harvestreturns.com, and they blog there. There's one other article, which I guess we won't really get to, but it's top 4 myths about indoor fish farming. And it's just explaining, I was reading through this, actually how fish farming can be environmentally beneficial, which I did not expect. Basically, one of the reasons, for example, is that if fish farming can be much closer to the actual consumption, which cuts down on energy and transportation costs. But in the other article about why this is relevant to younger people, you note that you can invest smaller amounts, which is pertinent to people who often have student loan debt or just getting started. And you said $5,000, for example, is a minimum investment. Naturally, people don't want to put just $5,000 immediately if they're getting started. But maybe they do. But what I mean is that there's a lot to learn about this. So aside from the blog that you have, is there a particular source on agricultural investments that you recommend people go to learn from, to immerse themselves in the field?
Yeah, there are a few websites out there that focus on agriculture investing. I believe AgriInvestor, Global Ag Investment, and the Global Ag Investment Conference is a great one that we've gone to. That's really focused kind of on the high end thing, but just do some Googling out there. The average listener that may not know much about agriculture other than what they eat at the supermarket or restaurant, there is a lot to learn about the subject. Go visit a farm. That's really how you learn. Whether it's a sheep farm in New Zealand or just out go pick local strawberries. There's a lot of places in say Florida and places like that you can do that sort of thing. So I would encourage everybody to learn more about this asset class, and yes, there is ways to make money with it.
Yeah, and I'm looking, you do have just a browse investments option on your website, and I see 4 listed right now. Is there a particular type of agricultural investment that seems to come to you more than others?
So we've been approached by, I think, about 200 farmers since we started up a couple of years ago, farmers and growers interested in raising capital. And we have a wide variety from those row crop farmers out there. But one thing that seems to be resonating is those sort of what people might characterize as sustainable investments, whether it's people converting a farm from conventional farming to organic farming, whether it's these novel production methods like the indoor aquaculture or hydroponics, people growing food closer to places it's consumed, and then some social sustainability types of investments, such as in emerging markets in Africa and Asia and those sorts of things. And we've worked with some of those companies to raise a little capital as well.
Right, and obviously Harvest Returns is on Twitter, Facebook. You've got all the social media. Do you personally have accounts we can follow?
I generally, if you see something like our tweet on Twitter, sometimes that's our marketing person, sometimes that's me. So that's a good place to follow it.
Sure. Okay, folks. Yeah, Harvest Returns is the one, and I personally find this particularly interesting. Obviously, given my background, and I'm glad to have you, and I hope we see you back again at New Orleans this year.
Yeah, great, Fergus. I appreciate the opportunity to talk about this. Very passionate about this, and look forward to talking to you again.
Cheers, man. Thanks so much.